Well, it's another episode of the Crypto Radar podcast. And what a weekend it's been, Darren. Bitcoin halvings tomorrow or today, depending on what time zone you're in. Bitcoin was charging up toward 10,000 and then plummeted. What was it, 13%? Back down to, what is it now? Oh, it's up to 87 right now, but it hit 81 in just over a day. Have you gotten used to the that kind of volatility yet? Does anyone ever get used to that?
It came a little earlier than I expected. I was, expecting the old buy the rumor, sell the news concept where, you'd see it build up toward the halving and then plummet immediately following the halving. And I guess someone got a little nervous and wanted to liquidate some longs a little early. Like, on a weekend when there's low volume, if you get one or two whales deciding to sell off, you're going to get this kind of action.
Yeah, it's I'm just trying to remember how volatile what happened after. Oh, okay. After the 2016 halving, it lost 30% after the halving.
Mm-hmm. Mm-hmm.
This is perhaps an anticipation of that occurring again.
Well, if you look over the past year, it's often come up around the 10K mark, and that's been resistance. And I mean, not necessarily exactly 10K, but around there. And my suspicion is there's, what was the name of that one scam? Was it Plus Token? Where they had a huge pool of Bitcoin. And I'm guessing there's a few figures like that, it hits a certain value and they're like, sell some more. Right. And if they're also shorting it, they can make some serious money doing that.
Yeah. Crazy stuff. I don't know how this looks for the regulators. When we see this sort of thing, we see hedge funds starting to become interested in it. This stuff does not augur well for those types. If we're talking about Bitcoin as an investment vehicle, that was quite a shock.
Well, that was Paul Tudor Jones the other day that made the big news because he's the seventh most successful investor of all time or something like this. Right? And he's saying, yeah, I'm going long on Bitcoin. Now, a lot of people kind of criticized him for not actually buying Bitcoin itself, but he was in Bitcoin futures. And, the thing is, when you read it, he was kind of talking about it as if he's going to do this. And anytime I read investment comments from someone like that, I think you aren't going to do this. You've already done this. Right. And so who knows? Maybe he shorted it, right? They're not going to say the day before they're shorting it. I'm shorting it, everybody. Look at me. I have a very large stake in this and I'm shorting it. Okay, everybody? They don't do that, right?
They don't.
So who knows? There could be figures like him who were taking advantage of the bullish sentiment. You have a low liquidity environment on the weekend. Coinbase comes to a screeching halt. A lot of people criticizing them for adding more and more shit coins and not actually improving their infrastructure.
Okay.
Who are very unhappy with them because they were unable to take advantage.
Right.
But yeah, really perfect scenario to put up some big shorts. Not that I anticipated it. I was expecting it to happen immediately following the halving. Still could.
Yeah, well, it did last time.
Mm-hmm.
I don't know how long it took. The reporting here says it dropped 30% after the 2016 halving, and I'm not sure in what time frame. It doesn't mention the time frame.
Okay, I'm not sure either. Yeah, to me, when I look at this right now, this actually feels like, to me personally, this is not financial advice. This feels like a reverse Bart head coming on here. I feel like we go for another maybe day or two and it's going to pop back up. But that could be going against a lot of technical analysis factors. But as has been seen over the past little while, TA doesn't necessarily tell you much.
If anything at all. I'm a little aware of TA, especially in crypto markets.
Yeah, it's just too low liquidity to rely on it.
Yeah.
Mind you, the volumes are looking good. Volumes are looking like they're just gradually, slowly building over time. So that's good. I think we see a very interesting week in Bitcoin.
It will be an interesting week.
Yep. I was looking at the hash rates, and of course, with the halving coming up, there's a lot of talk around hash rates. And if you look at the hash rates, they're the highest they've ever been. They're at, if I look on blockchain.com right now, the hash rate is right around 122 terahashes per second in the last 24 hours, which is the highest it's been in the history of the blockchain. And this is before we see gearing up from companies like Bitmain. I was looking at Bitmain's website and looking at the miners they have coming out soon. By the way, if you want to do it as a hobby, you can now pick up an Antminer S9K, which will mine at a loss. Okay, for $63. They're just literally throwing them out the back of a truck onto the road for people to pick up.
That's crazy.
But if you want to have an enormously annoying screeching sound going full bore in your house 24/7, you can pick one up for $63. But more importantly, if you look at shipping out right now, the Antminer T17 is shipping out, and that's pulling in 58 terahashes per second. Now compare that to the S9K. That's only doing 13.5. So, or is it terahashes? I could be using the wrong term there. Terahashes is for the whole larger, whatever. But anyway, the Antminer T17 is basically quadruple the power of the S9K, and that's going for $940. But coming later this summer, you've got the S19 Pro. That's at 110 per second. So you're talking nearly 10 times the power as an S9K coming out in August. And that's going to be going for $2,600 US per unit. So you've got some serious equipment upgrades coming out here in the next couple of months. And my suspicion has often been with Bitmain that they've got these deployed for themselves for a good little while before they release them to the public. That's just a hunch on my part, suspicion. Mm-hmm. When you see these big rises in hash power, I often think, maybe they've got a little farm going there themselves and they're taking advantage of their superior firepower before allowing the public to participate in that. Well, the public, exclusive multi-billionaire Chinese Bitcoin farms. But yeah, you're going to see some serious upgrades in hash power coming over the next few months. Like literally 10 times the power of the previous generation of Antminers. But if you want to, you can snap up an old one for
next to nothing,
under $100 and lose money on it.
Right.
And
all you'd need is free electricity, right?
Well, yeah, you do see these people who find ways to do that, but it's not necessarily legal. Here in Canada, we have some of the cheapest electricity in the world outside of China. So, for example, in Quebec, you have it's like 2 cents. I forget the unit.
Kilowatt hour.
Yeah, per kilowatt hour. Here in Alberta, it can hover between 2 and 3 and 4 cents, depending on conditions. So quite cheap. Other than China, it's pretty much the best place to go for mining, especially because they can use natural gas excess for that purpose as well. There are some mining farms here in Canada, nowhere near the scale of China. So yeah, I see the hash rate going up tremendously this summer, and price usually follows that, or they go in sync with each other anyway. Hash rate is the amount of power in processing that of all the computers in the world that are mining Bitcoin, that's how much they're processing the calculations, right? And so the higher the hash rate goes, the difficulty has to adjust to that, because you want Bitcoin to be mined every 10 minutes. But when the hash rate increases, it's actually getting mined faster than every 10 minutes because it's finding that block, right? And the simplest comparison for finding a block is if you imagine a number, like let's say it's a decimal and it's got 0.0 whatever, right? Well, what's the probability that the first digit's going to be a 0? Pretty high, really, like 1 in 10, right? What's the probability that 2 digits going to be or 0? Well, it's going to be less, right? It's going to be a lower probability. Well, what's the probability that there's going to be a whole bunch of zeros in a row? Much lower. And so all the difficulty adjustment has to do is say, okay, we're going to make it so that there's another digit of zeros that you now have to find all in a row to find that block, right? And so it just makes it harder to find that number, right? So the more computers, the more hash rate there is mining, after 1,008 blocks, I think it is, it will look and it'll go, oh, it's going too fast. It's faster than 10 minutes that it's being mined. So then it makes it more difficult. And then if you want to be in that leading pack that's got a good chance of finding that block, you've got to have the power. If you don't have the power, someone else is going to find it, right? And so with these new ASICs coming out here in the next couple of months, there's going to be a tremendous growth in power from these mining farms that are going to discard the old S9s that are no longer profitable. We saw it happen in March where they weren't profitable, right? And they're going to onboard this new equipment, and then you're going to see the hash rate climb again. Difficulty is going to go up again, and it continues. And it's just an ongoing battle of equipment and electricity fighting against this difficulty.
Right. And you suggest there's a price correlation with Bitcoin.
Well, the reason that I feel there's a price correlation is because the miners, they're not going to sell below their costs. All right. And people will talk about the electricity costs. They'll say, oh, well, the electricity is so cheap that, if you count the mining costs, it's around $3,500 in terms of electricity costs to get that reward. But they're not necessarily factoring in equipment costs. All right. These guys don't just run on electricity costs. They're constantly upgrading their equipment. They've got to recoup that. So you buy one of these S19 Pros, you're talking $2,600 US. Well, these guys are buying 1,000 of those at a time. They're not just buying one of them. They've got a warehouse full of them. And so that's a serious investment on their part. And so a business, pretty simple. It's not going to work if you're not profitable. So they're not going to sell. They're just going to hold it if they can, right? Some of the smaller operations may sell at a slight loss temporarily to get by, right? But the bigger operations, they're going to hold and they're going to wait for that price to creep up to a profitable point, and then they sell. And that's a huge portion of the value of Bitcoin is coming into the market every 10 minutes and being sold into the market, which is, to me, part of why I am so bullish, because you're talking about a constant influx of Bitcoin, right? We talk about it being deflationary. Well, it's still inflationary at this point, right? There's Bitcoin being produced every 10 minutes, right? So there's a greater supply of Bitcoin every 10 minutes coming into the market, right? Over the course of time, of course, that will diminish, right? Which is why one could argue it's deflationary in that sense, right? Because the scarcity of it is increasing, just like with this halving, right? So to me, that's a very bullish thing, because it means that even though we're having this constant increase of supply, the price is still quite buoyant, really. Yeah, sure, we had a small crash. That's someone, playing the market and shorting and then selling off a load of Bitcoin and cashing in on both. They're making money off the sale. They're making money on their shorts, which some people would say is manipulation, but that's how derivatives are supposed to work. They're supposed to do that with the market. They do it in traditional markets, just not to as great of an extent of volatility. That's how it works. You were writing about in your epic fail about Nouriel Roubini, harping on that. The S&P 500 has done the same thing. It's been extremely volatile.
Yes, it has been. In fairness to him, he's not exactly a fan of legacy banking and merchant banks himself. And he's pro fintech, just anti crypto fintech.
Well, I don't know. He kind of like it's like these other guys that are always bashing on Bitcoin. It's like that's your claim to fame now is bashing on something as opposed to standing for anything. I don't know. I never hear him talk about anything positive, does he?
No, I'm not sure that he ever has. He's Doctor Doom, right? I mean, he's always predicting bad things.
Sure.
Now he's found. Actually, he's clearly trying to sell. He's just selling stuff, right? He's selling speaking engagements. Selling. Yep. He may have a book coming out. That's all it is. The Bitcoin baiting behavior is nothing more than that, and Peter Schiff is the same.
Sure.
So we don't want to give him too much oxygen, but I thought it might be interesting to see if he actually had anything new to say in this podcast. Signed up to listen to it, and it is a laundry list of 2018 talking points. There's nothing's changed. The message is exactly the same, and it was almost like it was like being taken back in time, like entering, go into the Roubini time capsule back to the ICO, the days of the ICO craze.
Which is very bullish that he's back in the picture with this stuff. It's like Jimmy Song was saying, like Bitcoin's taking up free rent in these guys' minds, right? Yes. But what are you doing with this Bitcoin on your mind? Let it go if it's such a scam. Like, why are you paying any attention to it? Obviously, there's something there.
Unless we assume he's just trying to sell a book. Speaking of celebrity, your favorite celebrity, Justin Sun, and has received a $2 million handout from the U.S. government as part of their stimulus, their paycheck protection programs, PPP, Paycheck Protection Program, to help small businesses survive the crisis. Tron snapped up $2 million, and I know there's been some controversy with reasonably large organizations. Shake Shack got into some trouble for getting some of that money. We spoke about this before, right? And a lot of them have given it back. Sun has made no indication that he intends to give that stuff back. So that's where American taxpayers' money's going.
Now I don't understand, like, what would entitle Tron to that? Like, they surely, how are they even affected by all of this? And it's a blockchain. Like, what does that have to do with them having any effect on their business? I was gonna yell, but I thought that might be mean.
Yeah, that would have been very mean.
Oh, that was tempting, Paul. But anyway, we were talking about Justin Sun and talking about the fact that I don't understand how they're entitled to that bailout. Like, how does that work that they were able to get that?
Tron, the network got it. The Tron Foundation received $2 million in aid to keep people employed as a small business. Now we know that there's been problems with, if you because I guess this program was entrusted to banks. That's how it was structured. Hey, yes. Banks, there's money. If you give your clients this paycheck protection program money, banks, of course, look after the larger customers first, almost kind of white gloved through the process, not realizing that this is obviously intended. Well, not caring. What am I talking about? They're not caring that that this is intended to keep small businesses afloat during this period of hardship, and so it's in some ways, it's a cynical thing, but I get the feeling that a lot of it was kind of automated, and some of the Shake Shack people, to me, seemed genuinely like they didn't necessarily apply for it or realize it was coming. Yeah,
I see.
Justin Sun is doesn't have that kind of sense of shame. They're fixing so there's these loopholes in this thing, and they are the administrators and representatives are trying to fix this thing. But the very idea that Justin Sun would not even gesture to give it back is, and I don't know how big Tron Foundation is or how many people it employs, and can they not work remotely? This is the other thing.
That's the thing. That's what's baffling to me. You're telling me all the Tron Foundation people are in some office building somewhere, all working at like cubicles,
and now can't. Give me a break.
That's so strange.
Yeah,
I actually kind of understand it for Shake Shack, because they probably are hurting. I mean, their employees can't work in the same way that they would before, but I can't understand how Tron Foundation couldn't work the same way it was before.
No, I don't think it's actually the case. I think he's walked away with $2 million and it's gone directly into his pocket. Which is,
well, aren't there stipulations there that it has to go to employee wages though? There must be some kind of stipulations, or is it just kind of a carte blanche, do whatever you want? Like,
no, it's a paycheck protection program, but you can make that look however you want, right? Yeah.
I'm trying to give them benefit of the doubt. I don't know. Maybe they do have an office building with a bunch of cubicles and people working in it next to each other. I don't know.
Yeah, I'm not. I'm not giving him the benefit of the doubt. Who'd you interview this week, Darren?
I interviewed William Quigley. He's the co-founder of WAX, which is a worldwide asset exchange. A very, very interesting story. He comes from a family of 12 kids, single mother.
Whoa.
Living in Oakland, California in the 70s, which, if you know anything about the history of economics, that was a rough place to live in a rough economic time. And a lot of what he talked about was the family dynamics. They were all entrepreneurs. They were all hustlers. Okay. So his mom, for example, she got into business as medical transportation, and she built a fleet of vehicles. And this is a person with like very little education, came to America at 15 years old with hardly anything. And she built a business for herself, a very successful business in medical transportation. And the kids, like William Quigley was saying, back in that time, there wasn't a whole lot of rule of law either. For example, he was delivering flyers, and you might think, oh, delivering papers, big deal. How much money can you make? Well, what he did is he was 10 years old driving around on a motorbike delivering papers. So he could literally deliver 10 times more papers than what your average kid could do, zipping around town delivering papers. And so he made good money doing that. He, 10 years old, helping opening up these laundromats and getting them all set for the day. And back then, being 10, 11, 12 years old, something like that, he was making $50 a month as a kid doing that, which I know in today's day and age, that doesn't sound like much, but in the 70s, for a poor family, for a kid to make $50 a month doing that, that was pretty good money, right? And so he always...
10-year-old kid?
Yeah.
That's good money now.
Yes.
For a 10-year-old.
Exactly, right? And so he was always a hustler, and it's a very good story. It kind of delves into his background a little bit, and then, of course, moves forward into his work in... a lot of it was about tokenization of NFTs, so virtual game assets, and making that work. And he talks about how they came up against the problem of surge pricing with Ethereum, just about killed them. Where, normally you could, issue a token for about, say, 25 cents, right? And when there was this huge surge of congestion in Ethereum, all of a sudden it was like $40 to issue a token, and it would take something like, he said 17 hours to transfer this token, because the blockchain there was a project, I forget what it was called, I think it was Fcoin, that completely messed up the system because it caused everybody to want to spam the network. And he said that just about killed them. And so then it talks about what they did to deal with that problem. And very interesting interview. He's very a lot of kind of libertarian ideals in there, very much from his experience as a child, trying to make ends meet and, trying to get by. And, they were all, entrepreneurs. So kind of coming up against, a lot of the opposition comes from, bureaucracy oftentimes. So he talks about how bureaucracies will often react to a situation too quickly in some ways. In a panic, they'll throw in some regulation or rule, not anticipating the harm that could cause to the economy, not seeing the implications. And so he says we need to step back and kind of get perspective before we make rash decisions that might harm the economy. So yeah, it was very good talk. So that's in Journeys in Blockchain. How about you with your epic fail and nailed it? We talked a little bit about Roubini.
We talked about Roubini. The nailer this week was that was quite an epic title from John. Yeah, Paul Tudor Jones of the Tudor Investment Corporation, and he, for context, is the 7th most successful hedge fund investor in history, is concerned that in the past 2 months, the central banks around the world have printed 6.6% of annual global GDP out of thin air, which, and when you add that to rising unemployment rates, could lead to a 1970s style period, which we were just talking about, which, you know, was
right.
Stagflation was the problem, right? Inflation, but an economy that isn't growing. He's concerned, and he said, I mean, someone asked him, well, this was in client notes, if I'm forced to forecast. So he was talking about, he wants to, the easiest way to make money is to ride the fastest horse. In his words, if I'm forced to forecast, my bet is it will be Bitcoin. So there you go. And what this does is give cover to a lot of hedge funds and a lot of investment managers around the world to also invest in Bitcoin, or at least Bitcoin derivatives, because of the respect people that he has in the industry. So the side he's got, we want to put it into perspective. He has $13 billion on assets under management, $13 billion worth of assets under management, and he's looking at single digit percentages, so under 10% of that into crypto assets, Bitcoin in particular. So it's not huge in terms of, you know, Bitcoin demand, but it is a signal. I think it sends a strong signal. Bitwise liked it. They noted there were 3 reasons why it was an incredibly bullish event for Bitcoin. Let's call it an event. A, that he is as successfully as he is, and he's staking his reputation on this in very many ways. He has a track record of proving right on contrarian calls, and he pressurizes his colleagues and other hedge fund managers to follow suit, and also provides cover for them. They get it wrong. It's well, I'm only doing what what Jones is doing. That's cover. So
don't blame me.
Yeah. So I mean, I think it's an incredibly bullish event. It's not going to overnight change anything, but what it will do, it is as a signaling process. This is things look good for Bitcoin, at least as an investment asset. If you believe in Bitcoin as an investment vehicle, it's a very strong signal from someone with a lot of respect in the industry, the traditional industry. So
right.
Yeah.
Well, and this kind of connects to what I was going to talk about with Bitcoin being a non-correlating asset, and how that's a big part of that, because now people will argue, oh, but it has correlated with the S&P 500. So I took a little bit of time to look up how much it did correlate. And there's a website called blockchaincenter.net that has a correlation tool. If you just type in correlation tool, blockchaincenter.net, you can look at it. And what it does is it uses a ratio of correlation, and a 0 is no correlation whatsoever. A positive 1 is 100% correlation, meaning the movement of the one is exactly the same as the other. A correlation of -1 means they're exactly inversely correlated. So one goes up, the other goes down. Okay. And if you look in the history of Bitcoin versus S&P 500, if I go back, say 2 years, I'm just going to click on it here a second and look. Okay. The correlation with the S&P 500 to Bitcoin is 0.15. So you're talking very close to no correlation whatsoever. Now, if you go more recently to 90 days, there is a higher correlation, and that's because of that fall on March 12th, that affected all markets.
Yeah.
The correlation jumped. It went from around 0.04, like almost no correlation whatsoever. It hopped up to 0.5. So significant, right?
0.5.
A significant increase in correlation. And that's over the past 90 days. Now, if you look at the past 30 days, which I'm going to refresh this again.
Yeah.
It's, where is it now? Well, it's dropped. Okay. It's again, the correlation is falling and it's going back to being less of a correlated asset again. Interestingly, it doesn't correlate that strongly with gold either, which you would expect it to do so. But there's not a particularly strong correlation there to gold. But to me, that's again, one of the big selling points of Bitcoin is that historically, it's not strongly correlated to other assets, even though there are blips in time where it is. But that to me makes it, again, something where you can put your money in and have different results than if you leave it in other things, which is a good thing when you're trading.
Yeah, absolutely. Absolutely. So your argument is that it's a tool for diversification, essentially.
Absolutely. And the numbers bear that out. The numbers bear that out.
Yeah.
Yeah, sure, there are blips where it correlates more, but that doesn't make it a correlating asset, right? So it is the highest level of correlation it's had. I don't know about ever, but it could be closest to ever. And again, that's spiked on the market collapse that happened in March. And since then, it's easing. So we could see it pull back. It should pull back over time.
The correlation.
Yeah.
Yeah. Right. Yeah.
Yeah. So to me, that's one of the big selling points of it. Yeah. Okay. Currently, as of now, the last rolling 30 days, Bitcoin is at 0.32. So it's pulled back from 0.5 all the way back down to 0.32 and seems to be heading back downwards. It fluctuates around 0. If you were to average it out, it's almost perfectly 0.
Is that right?
Yeah. If you have a look at the tool, you can see that over time, it fluctuates above and below 0. Almost, if you were to average it out, I would be surprised if it was not very
all that
close
far
to
from
0.
Okay, so
which is no correlation.
So let me get this. That's not the perfect anti-correlation. That just means no correlation.
No correlation. Inverse correlation would be where it's doing the opposite, right? And then it would be a negative value. And the closer it's to -1, the more closely it's doing the exact opposite.
Right.
But it's even better than that, right? You might think inverse correlation is good. Not necessarily. It's just it's again, in a way, it is correlating, right? It's just it's better if it's not correlating at all. So what were you? Do we want to look at the definitely not financial advice results a minute?
Definitely not financial advice segment coming up on the Crypto Radar podcast, proudly sponsored by nobody at the moment.
Sponsors.
The DNFA segment, which is also sponsored by nobody. I remember last week you predicted, and we missed a week there.
Well, it was 2 weeks ago, yeah.
2 weeks ago, you predicted when the Fed would meet that they would pull official rates into negative territory in the United States for the first time in history, and you were flat wrong.
I was wrong. However, not entirely wrong.
Oh, here we go.
What I said was they would announce a negative rate for the first time in American history. Okay. And you said it would stay at 0. You were right. I'll give you that. But I did say prices are going to kind of go cool, steady Monday, Tuesday. On Wednesday, it's going to go ballistic, which it did. So if people had followed my definitely not financial advice, they actually still would have been ahead.
What prices are you talking about?
Bitcoin.
So you're trying to roll. You made a double prediction. Are you claiming?
No, my prediction was about the interest rates, but I said it would have an effect on Bitcoin, being that when interest rates fall, people tend to turn to Bitcoin for the fact that it goes up against the fiat.
Oh, right. Okay. Yeah, I'm not. Yeah. So when I'm not playing poker with you or keep this guy out of Las Vegas, everybody. He's rolls a coin and he's heads he wins, tails he wins.
Pretty much. How about your Daedalus wallet? How did that install?
Lovely. So the install took what have I got here? Yeah, it was an hour 45 to install it.
Wait a minute. You installed this wallet?
I updated the installation. Yep. Okay. To 1.0, right? The new one, which they claimed is because I think there'd always been problems with Daedalus sync times. I have written down here, so it syncs, it downloads the entire blockchain, right?
Sure.
It's a full.
It's enormous.
Block. Yeah. It took, I said it would take under 48 hours, which is, I'm just sort of being ironic. It took 47.5 hours to sync to the entire blockchain. So I'm calling that a win for me. And probably, I reckon, I think I win in much the same way as you win, which is that I was actually expecting far higher performance levels from the new release than what I got, and I was being very generous with 48 hours.
That's a suspicious number there. I don't know about that. 47.5 hours.
Yeah, very close, very close. So by the skin of its teeth.
So we're calling it a tie? Is that what you're saying?
I think we'll call it a tie. I think we'll.
Right. So you keep your Tron, I'll keep my Verge.
Yep.
Yeah.
Yep.
A little dissatisfying. I don't know.
So what do we got for this week? Have you got a prediction to make?
I do.
Okay.
You want to go first?
I can go first.
Shoot.
Justin Sun gives $2 million back to the U.S. government by this time next week.
Interesting. Okay.
Yeah.
I'm going to go against you on that. I don't think he's giving it back.
Actually, no. Can I change that?
What?
Justin Sun will announce that he is going to give the $2 million back.
The announcement of the announcement that he's going to?
Yes.
Okay, I'm going against your bet there. I don't think he'll give it back, at least not within this week.
Okay.
So that's a simple DNFA bet there.
Yep.
Mine is a little more convoluted. I was looking at Bitcoin dominance. Bitcoin dominance currently stands at 67% of the market. For those who don't know, that means how much of the entire crypto market cap is occupied by the value of Bitcoin. All right.
Oh man, that was a perfect one-liner on what Bitcoin dominance means.
You think?
That was almost poetic.
Oh, well, thanks.
Yeah.
Because of the hype, because of the halving, dominance has been kind of creeping upwards, kind of occupying more of the market. You see less altcoins getting attention. My prediction, though, is that we're going to see Ethereum heading up again and Bitcoin easing up and about an equivalent amount. And when you look at the reasoning behind that, I think once this halving thing is done in the next 24 hours or so, the hype will ease up from that. And people are going to start talking about Ethereum 2.0. They're going to start talking about the fact that if you hold 32 Ethereum, you can stake with it. And we know that there's usually a pattern here that once Bitcoin dominance eases, alt season begins. And alt season, though, is quite a lot more selective than it used to be, right? It used to be you could take any coin, and if somebody like, say, John McAfee said, I like this coin, all of a sudden it would, rocket up to ridiculous values. We're not in that scenario anymore, right? People are more discerning. And I think what you're going to see is people going, okay, I want to start accumulating Ethereum. I need 32 Ethereum to be able to stake it. Of course, it's a long path for the actual process to be where you're going to be staking it. That's not happening overnight. But I think it's going to be the next big story that you're going to see coming out now that the halving is going to be finished. And I suggest that we're going to see a rise in the dominance of Ethereum. Now, of course, being DNFA, I've only got a week window here, a single week.
Yeah.
Right.
So that's what I was going to say, man.
Kind of limits.
As this unfolded, I was whoa.
So what I did is I looked at the TradingView charts for Ethereum dominance. You can do this if you type in Ethereum dominance TradingView. And if I look just over the past 5 days, I see that Ethereum has posted as high as 9%, 9.1% dominance approximately. And it's fallen as low as about 8.8%. One point in time, it fell a tiny bit lower than that. So because I only have a 7-day span here, I'm saying it's going to break above 9% again, which is still, if you look at that, that's still significant. So that's my DNFA. It's going to be going to 9 point. Let's see this.
Wait
it's going to exceed 9.1% of the dominance of the market from currently 8.91. Doesn't sound like a lot, but it is a lot. It's significant. Okay, trust me.
Okay, so your prediction is an Ethereum dominance.
You know what? I'll go even a little bolder. I will say it's going to break above 9.5 by next week, Sunday. 9.5% dominance. That's a lot.
There is no way that's going to happen. No way.
You're taking that bet?
Oh, yeah, absolutely. I mean, you're talking millions of dollars transferring out of something, probably Bitcoin, I guess is what you're saying, into Ethereum. Altcoins
shift their altcoin fortunes into Ethereum.
Yeah.
Obviously, I think it's truly a longer game, but I'm limited by the
you are
time constraints here.
I'm interested though, just for the purpose of staking a record. What do you think Ethereum dominance looks like, say, a year from now?
I think it'll be significantly higher.
Okay, like double.
I would say somewhere between 15 and 20%, back where it was, before when the markets were more hyped for Ethereum.
Okay.
I think in its all-time high, it was at like 25%. Like it was a quarter of the market.
And where does it suck value from?
Altcoins.
Okay.
So
there will be
Tron, Verge.
Is there a Verge dominance this week?
I don't know. I've never looked on TradingView for a Verge dominance.
Tron dominance 0.00001% with an 85% dominance on Twitter, right?
But there's a good 10-15% of the market that's sunk into stuff like XRP or whatever, where you got Jed McCaleb just dumping on his fans week after week.
Yeah.
Right. And they're, going, come on, XRP. And it's like, do you not see the problem here? And there's going to be people getting hyped about Ethereum, I think, but it'll take some time, obviously. But I'm just saying, I'm going for a bold prediction here with the 1 week time frame is admittedly tough.
You are, and I'm not quite sure why you picked that as your DFNA prediction. But anyway, I've got you on the hook for a year from now. We'll certainly see if that pattern does play out.
If I'm right, that would be pretty impressive.
It would be impressive. Yeah, absolutely.
It's feasible. May 1st, it was 9.5%. It's not that long ago. It's just people, because of the halving.
I'm just wondering how much money that actually is moving.
Yeah, you'd have to do some crazy math there to figure that. I'm not sure. But I see it popping back up here after the halving.
Okay.
Come Thursday, Friday. Yeah. I'm going to be watching it. It's going to be exciting.
All right. Well, we'll check on those DNFA predictions.
And yours again was that Justin Sun
will announce that he will return the $2 million to the American government.
Honestly, I think I've got a better chance. I think your odds are worse than mine.
Well, he announces stuff that he has no intention of doing. I don't think. He'll let the publicity play out for a few days and then he'll make the announcement.
Yeah,
he'll announce he's thinking about it.
Sorry, yeah. I got to throw one more disclaimer in here. I don't remember if I used the right term for the mining, terahashes, exahashes. I don't know. Whichever one it is, correct me if I'm wrong. You can say something in the comments and subscribe and like.
Subscribe and like and comment if we make mistakes and sound out below what you think of our DNFA predictions as well.
Absolutely.
We'd be happy to hear some alternative POVs.
Maybe someone's looking up the Tron dominance right now.
Yeah, that'd be cool, man.
Will Tron dominance increase if Justin Sun announces giving back $2 million? Could be the two kind of coming together.
That would actually be a kind of really interesting story to cover the correlation between Justin Sun being a decent human being and Tron dominance.
Dominance is probably not the right word when it's less than 1% of the market.
Yeah. All right, Darren, it's good speaking with you again on the Crypto Radar podcast, and we'll see you here, same bat time, same bat channel in exactly a week.
Excellent. Talk to you later.
Right on.